But Sarabjit Kaur Nangra also on the phone line with us. Sarabjit, 2,850 rupees per share, 5.6 crore shares. That's the kind of buyback that's been announced. Your reaction, what's going to happen next? The stock has already surged up by about 5.5%.
See, it's I would say, kind of a good price, what they have indicated, because if I'm not wrong, you said 2,800, right?
2,850, yes, for 5.6 crore shares.
It's higher than even the targets which are working on the street in terms of stock prices. So it's a benchmark that the company is confident about growth prospects and definitely about its future prospects, and hence I guess even I think we were more aggressive in the street right now. We had a target of 2,620 odd for the company. So if you're coming with a buyback much higher than that, what you're implying basically is that they are very confident about the future, and since a large portion of the cash is getting allocated to the same, I guess it's a really thumbs up for the confidence that they've shown in terms of the company's prospects in the future.
Right. Sarabjit, as we're getting the numbers right now, it is 2.8% of the total equity which they would be buying back, and for which they're spending about 16,000 crore rupees. The buyback will be taking place at 2,850 rupees. So, as you rightly mentioned, that this has come above what the street was estimating. So, and that's the reason why we've seen that sudden spike in TCS stock as well. Tell us, how much of that EPS accretive do you see this buyback can be in the next 1 or 2 financial years?
See, EPS-wise, obviously, currently, without getting into any, numbers, ROE and other things, cash component and other, because obviously a bit of cash will get translated into, by doing the buyback. So, if not getting too much into detail, I guess you can roughly assume that EPS benefit will be to the same extent, actually. So, currently, I have not worked out my numbers to the real benefit of equity shareholders getting out of the buyback, but I think crude ways that to that extent that they've announced, at least that much will be passed on, actually.
So, Sarabjit, whenever there is a large amount of cash pile on the balance sheet, usually the P multiples, they actually go down because there is a large fear about the cash utilization. Now, given the fact that the shareholders would be actually rewarded with a very hefty share buyback, and the earnings obviously would get actually adjusted accordingly, do you think that there is a chance of P multiple re-rating here, or because of revenue growth which has been actually moving quite slow, this sort of P multiple is still going to exist despite this sort of heavy share buyback?
No, see, that's what I said. I've not worked out exact economical benefit. That would translate because of a number of shares reducing and P multiples expanding, and definitely P multiples will expand because it's not a small buyback. It's pretty huge buyback, and it would definitely uplift. I don't know. I think it will. Currently, company is sitting on a cash of, I think, I'm not sure with exact numbers, but I think it will substantially take away a large portion of the cash from the balance sheet, and hence ROEs will substantially get uplifted. So to that extent, definitely ROEs which are compressed, though not for TCS, for most of the IT companies like Infosys, 20%. TCS is still, because of high dividend payouts, is rolling around 30 plus. So it will get a boost, and definitely because of substantial, utilization of cash and increase in the proportion of high cash yielding assets on the balance sheet vis-a-vis cash, which is a low yielding investment on the books getting off. I guess definitely a re-rating would be there. And as far as growth is concerned, definitely short-term reflects growth more predominant in stock markets. But being a fundamental analyst, there are two. When you do a DCF, which values a company, there are two components, growth as well as ROE. Now, in the case of IT company, the irony is that the ROE of the company is significantly higher. At this phase, also TCS is running at a ROE of 30% plus. And the growth of this industry is hovering around, say, on a normalized basis, 12 to 14%. given ups and downs that it keeps on seeing because of the macro environment. So the component of ROE in to just give you a picture is actually weightage is more, but given the short sightedness the market has, it tends to reward the growth more than ROE, which is the tragedy in IT actually, and that's a good signal that TCS put in by this buyback is that the business profitability is still strong. So growth, I think normalized growth that IT companies still are looking for next 4 to 5 years is around 12 to 14%, which given the base that they are functioning and the market share they have in the global industry of 55%, I think is not a small amount. So to that extent, I guess so. And given that with this buyback, the ROE will substantially jump from here on. Its valuation dependence of growth should reduce, ideally, given the
right.
Yeah.
Sarabjit, thanks very much for joining us. We'll touch base again with you and get the clear details on that buyback. But thanks very much for joining us as of now. That's TCS stock for you, trading higher by 4%. Let's get you some more market voices. Bhavin Shah of Samiksha Capital, as well as Karan Tarani joining us of Daulat Capital. Bhavin, let me come to you. A price of 2,850 is the price at which the buyback will happen. It is 2.8% of the equity. Well, it looks like it is above what Street was estimating. If you look at the buyback price, what are your first reactions to it?
Well, it's a pretty decent sized buyback. You look at, if it's, I think what I was told is about 15,000 crores. It's putting in perspective of the annual profits. It's a pretty substantial buyback, and obviously it's in top of the dividends they are paying out. So, really increase the payout ratio, significantly amount of 50% this year. And I think, in that context, it's a good buyback.
Right. Bhavin, also tell us, as of now, it's 2.8% of equity. But if I look at the net worth as an end of December 16, that was 83,847 crore rupees. And they will be spending about 16,000 crore on this buyback, which is about 19%. Do you think they will have to go in for shareholders' approval for the same?
I'm not, yes, I guess the buyback, they require shareholder approval, yes.
I believe as per SEBI rules, it's 10% of the net worth. If it's higher, if it's till 10%, you don't require, and it is above 10%, the company will have to go for shareholders' resolution for the same.
Yeah, okay, I'm not too familiar with that rule. So, but, I'm sure this will be, even if they require an approval, I don't think that will be an issue at all. The fact, given that it's a pretty generous buyback.
This is Piyush. Now, one of the questions which normally the investors actually have is that when a company has a large amount of cash, there are only two things you can actually expect. Either the company to actually return the cash back to you in the form of dividends or share buyback, or secondly, the company should be deploying the cash back into the business. Now, after such a large amount of cash returned to shareholders, and we know that TCS has a very good strong cash flow. So, what actually you would be advising investors now post this share buyback which happens? Is the company actually poised for a good re-rating, or you would actually advise the investors to take advantage of the buyback and then wait?
Well, I don't think this has to result in re-rating. In fact, the stock has moved up pretty, considerably over last few sessions, kind of on an expectation of some buyback, this kind of news of buyback, and ultimately you'll have to look at. I think IT stock, TCS, Infosys, both are, I would say, priced reasonably okay for sub 10% kind of return from here onwards. So, if we are happy with that kind of returns, and although those are pretty reasonable and safe returns in this kind of names, then you can consider staying in this.
Right. Bhavin, if I look at the promoter holding in TCS, that's about 73.3%. Maybe the promoters also tender their shares, and that 2.8% equity will now be extinguished and the equity base capital will come down. Do you see any change in the promoter holding post the buyback takes place?
I think one of the reasons why companies tend to do buyback at a high price is to also kind of, it's also, to be drive everyone to tender their share of the, their portion of the shares for the buyback. And I think the buyback offer will actually most likely specify that the promoters will also be tendering their shares. So I mean that is kind of usually clarified in the offer itself.
So, Bhavin, I have a question here. I was just looking at the maths here. Now, if I look in terms of the shares which are going to actually go out of the system, the new shares which will be roughly around 191 crores. If I look in terms of the FY18 consensus estimates, the new EPS for FY18 could be roughly around 148 rupees per share. That could be roughly 3.4% upgrade after this buyback happens around the price which TCS is proposing. And if I look in terms of the current P multiple, which is roughly around 19.9, the stock price could be actually roughly coming around 2950, roughly closer to 3000 rupees. So if I look at this maths, it still implies roughly around 20% upside for the investors. Forget the P re-rating which could happen or not happen. Is it a very good time for the investors? Because by the cash return, the investors actually are going to get a very good opportunity.
No, I don't know what, I don't understand your math. I mean, I think, if the cash is coming out of the company, that much, the investment income from that cash will also come, will reduce. I don't know if your EPS number for that or not. And as I said, there was already a certain rally in the stock of late, so it depends on what starting point you use. So, and I don't think one can do math the way you have done it.
Right. Bhavin, just from an investor perspective, do you think they'll tender shares at this price, or will they wait for further appreciation?
So 2,800 is a very good price, right? I think it's still a premium above current price. That's what I was saying, that the idea of having a buyback at a higher price is to basically encourage everyone to tender. So I think if you don't tender, you actually whoever doesn't tender lose out, because companies distributing cash and you're not paying, I mean, unless you expect, significantly higher share price in future, and I personally think this is already, the stock has already moved up a bit, and then on top of that you're getting another upside. So I think, most investors should tender.
Right. Bhavin, just the final word then, does this put pressure on an Infi to follow through on a buyback? In your analysis, do you believe that Infi will now come through with a buyback?
Well, I think they have not denied that they will not do it. I think they have given sort of a response that they are considering it. So I think there will be some more pressure on Infosys for sure to do this.
All right, that's the view coming in on the buyback of TCS, the announcement which has just come in. Bhavin, thanks very much for joining us and giving us your expert views on the same. I'm sorry, I think Piyush has one question for you. No, all right, no worries. Bhavin is just, Piyush, what was the question?
So no, actually I wanted to say something is that what the point Bhavin was saying was very interesting, and is what actually stock price is telling you. Stock price is now roughly around 4%. 2850 is a long way ahead from 2500. So ideally the stock should have been 10% down if it was a straight one-to-one math here. Right. Now some treasury income is going off, but because 2850 is there, it means the stock has a perfect floor now. So anyways, basically a floor means that the people actually are going to keep continuing buying the stock. Right. And if you look in terms of EPS matrix, it's a very good free cash flow generating stock. 30,000 crores was the cash sitting here. The analysts were estimating this cash to increase to 42,000 crores, which means every year substantial cash is coming to the balance sheet. So they're just retaining.
One important point here was what was the yield on the cash they were getting. If the yield was higher than what they're going to extinguish their equity and the return they get, then probably it may not be as EPS accretive as it may sound right now.
Absolutely.
But I'm sure the management is not going to reveal to us what was the yield on the cash. But as the entire street is assuming, because there was a time when the bank rates were at 8 to 9%, which has actually come down to 5 to 6%, and that was the reason probably the shareholders were putting that pressure to go for a buyback, because probably your yields were coming down. The valuations for the entire IT sector has corrected. Cognizant has done it. Accenture is the biggest example, which the street is talking about, how they have improved their financials by just doing buyback time and again, and probably that was the reason why TCS has also gone forward and actually done what the shareholders wanted.
Yeah, I think one of the reasons which always is being practiced by every company, when the growth slows down, you have to do something to please the shareholders.
Correct.
And I think they have just used the cash for buying time.
So they've provided that floor on the stock, and the pressure then is now on Infosys, because if you pull up the stock of Infosys, that one also spiked up on the back of this news. 3% of a jump coming in on that counter. Sorry, a percent jump coming in on the counter of Infosys at close, and that one also closed at the highs of the day. So the question then is, TCS has gone ahead and announced a buyback, and with everything that's been happening at Infosys, are they under pressure to follow suit? For now, we will of course keep it with this story and get more perspective on this. But Piyush, thank you for joining us with that analysis from Navneet and me. That's all the time on this session of the Trading Day. Thank you for watching.